So what are you thinking? Jobs Friday on a Friday before the big weekend. Wow.
I'm not going to say they're going to be good or bad. You know me. I'm
Well,
not going to commit to either side because you never know. It's a gamble.
it's
Um,
just been so wild the past few months too. I mean, gosh, it'd be crazy to commit.
well, July and August were really great. We had good numbers, strong numbers that typically aren't. July normally has decent numbers once in a while. August sometimes has decent numbers. Last year's August wasn't good. The August before that wasn't good. Um, but the September numbers, like I had stated earlier, we haven't had a positive September number since I can go back on data, and that's before 2007, 2008.
Wow.
So it's hard to say that everyone's kind of thinking, well, we've been getting good numbers, we're going to have more good numbers, and at the same time, there wasn't a lot of jobs cut with the U.S. Challengers number that came out. ADP, it wasn't terrible, but ADP is not the best indicator of what NFP is going to be.
Right,
So
right.
it's a toss up, and the best thing I can say is, what have you heard about in your area?
Yeah,
And
that
and I,
makes sense.
and I think for a lot of people, you know, in the U.S., if you make more than $40,000 to $50,000 a year as a household, then you can get out of touch with what's really going on in some places.
Totally.
And
Yeah, I
and
agree.
and I see a lot of on financial Twitter. If you're making decent money and you're able to pay your bills on time without living paycheck to paycheck, you're actually not in tune with the majority of what Americans are going through.
No,
Because
that's the fact. I mean, um, and yesterday we just had that ISM number that was just terrible too. I mean, gosh, contraction is and suppose that big expansion number they were looking for.
I'm actually not surprised. Um, the one thing that we've been lagging in off and on all year is market services PMIs and manufacturing PMIs. Our PMI numbers have, and our industrial, when they come out with the Philly Fed and the Chicago Fed and these numbers, they haven't been the best.
No, no, you're right.
And
We
when
had
we
said
do
that
get
Empire number was terrible.
yeah, we get a good number and everybody's like, woohoo, it's coming back. Well, the next month it's down again. I mean, it's so wishy-washy. There's no consistency, except the consistency in the bad numbers is most of the time they're just staying bad.
Hmm. Well, it just really surprised me to hear anybody from the Fed talking to Congress and looking for them to spend. Normally they're just telling them to stop spending. I mean, I remember all I ever see Bernanke, and I don't watch anymore. I just do not watch or listen or pay attention more than just headlines and what, everybody else is seeing. But it's kind of spooky, to think that, this is where we're at now.
Yeah, yeah. It's it's a very pivotal kind of time that we're in right now. If you go out and you read blogs or you read economists, everybody's gloom and doom every day, and then you go to the next one and they're upbeat. So if you go by certain different people have different perspectives of what's going on.
Well, I find
And
with writers, it's easy to catch them contradicting themselves, so they'll be able to go back and pull that
oh,
piece up.
absolutely,
And that's
absolutely.
that's that's the Kramer maneuver. He's the one who patented that move,
Yeah, yeah.
and that's
Um,
sickening. And that's why I turned a lot of it off. I just cannot watch it, because all these two people are doing is just talking their books and
well, the best thing that I would recommend doing is if you really want to get a feel for what's going on, just look at the numbers. Look
yeah,
at look at the facts and stop listening to what everybody's saying. I mean,
yeah.
you can go and you can look at bonds, you can look at stocks, you can look at commodities, you can look at the Fed funds, the commodity index. There's plenty of signs of what's really going on without having to listen to what other people are saying.
Exactly. Yeah, that's exactly. And you do have your certain people that you can trust, like your Mark Chandlers and people like that who, I mean, it's amazing what he gives out for free, I think. The stuff he writes, I mean, he gets paid obviously, but you would think that would be more behind the curtain stuff.
Yeah, his articles are great. I love reading his input that he puts out every day. I've been a big fan of his for a while.
They must pay him a
Um,
lot to do that because he is really candid. I mean, it's stuff that he puts a lot of effort into getting.
well, and I like the way that he breaks it down for the average person. You know,
Totally. Well, he
you don't
has to.
have to be, from a financial background or have gone to college for it to understand what he's talking about.
Well,
So,
he could make it where we couldn't. I mean, where most people couldn't understand any of it. Especially a guy like
oh yeah,
myself, if he wanted to.
yeah,
I
yeah.
mean, I send articles to that like that to my father all the time, and he sends back. I have no idea what he's talking about.
Oh, I do have a question for anybody that's listening. Did anybody short oil yesterday?
That was something you were talking about, right? Let's pull it up. And Nick says hello, and Catherine says good morning, Beth. And Nick says great to hear from you. And he says, what is your current view? What is your view on this current cable level? Here, talk of closes above 3280 being critical to push higher. Let me pull it up. I'll pull up the futures.
Well, it is in a consolidation. I mean, it's pretty obvious. You've got a nice little rectangle building since June, since Brexit.
Right.
I think there's a ton of stops that's sitting above. If it can get, and this is one of the most important things, where it's sitting at right now, any good news is going to boost a rally. And if that rally catches any wind and it gets, a little bit higher each time, it's going to start popping them stops. And then it's going to explode for a little bit. I think, what was the level he said, 136 or 135?
3280, he said. 3280,
130.
where we are now, I guess, right? Isn't that where we are? 3280. We're right at
Um,
30. Yeah, I have 3281 on the futures, and I have
it
3276 on the pound dollar.
3280 is a zone that I have, but I'm looking at zones at this point. Um, as far as am I willing to get long or short in this area? To be quite honest, I haven't done a lot with the pound. There has been a lot of people making good money off of it, going back and forth, and it's it's like I said though, you get any good news or any bad news, it's like it'll move just the slightest little bit right now on anything that comes out.
Right.
And the
It's
one
like a
thing that you
coiled,
can't
like a coiled
control,
spring.
yeah, it's no different than last year with Euro and Grexit. I mean, they would come out with one rumor on Tuesday that would send it through the roof, and within 15 minutes, the rumor would get denied, and then it would just fall right back down.
Right.
So, with it being something pivotal like that, where I mean, it could still happen. Yeah, I mean, you still get these little
Right.
news pieces that makes
You
it
think there's a
move.
chance it could retest lows? I'm curious if that's a possibility after this big move, or we have to move higher first, or just like you said, we're just gonna have to see what the data and what comes out.
I
Just
mean,
drive it.
I would think we would have to pop a few stops higher to
Yeah.
see new lows. I mean, you've got to find the liquidity to push it lower. And right now, it doesn't have enough to push it.
Yeah. Yeah. That makes sense. That really does. Or else it would have already.
Yeah, absolutely.
Okay. And Michael says aloha Beth and all. And let's see. Um, Nick goes on to say Bloomberg thinking real danger is in non-farm in the 115 to 125 range, bracing for a disappointment based on history. Expectations may be too high. He says non-farm last 5 years average has been 116 with no years above 200K. And Ty Willie says hello Beth from Thailand. What's your view on a rate hike? I see no hike this year. Your thoughts? I think she said she was at 50-50 last. You still in that mode?
Yes. Okay. There was a piece that came out, and give me just a second, pull it up, and I'll read it out. There was a little piece last year when they raised the rates in December, and it gets looked over quite a bit, but it said that most members expect the new rate to coalesce somewhere around 0.375% before the next hike. So in December, when they changed it, it went from 0 to 0.25 to 0.25 to 0.5. They expected it to settle in somewhere around 0.375. You look at Fed futures, current Fed futures today is at 0.465 for the October contract. Now, you're thinking to yourself, well, it's not priced in. They can't go above 0.5 because it's not priced in. But the members actually said they're expecting 0.375. So it's above that.
Right.
And it had to be 375 for them to think about the next hike. So from that perspective, they could easily hike in September.
Right, yeah.
Because they're 10 basis points from almost 10 basis points above where they were looking to be before their next rate hike. Now, at the same time, you know, they've got good numbers in July and August. The numbers that come out today, they could easily say the same thing they said last year when they got bad numbers. It's not that big a deal.
Right, right.
It's just one set of numbers. And where they're data dependent, you know, they keep saying they can easily pick and choose which numbers are bad and which ones aren't.
Right.
You know, oh, this,
so if
this
they
isn't
do
so bad,
September,
this is cyclical. You know.
Do you think if they do September, December would still be on the table?
Yes.
Wow. So you're thinking there's a really good chance for two hikes this year still. See, that's something I just don't see. That's why I think it would be so much easier for them to blow off September and do December, and just so they can say they did the token hike at least one. I know they said 4 at the beginning of the year.
I think they're looking to possibly do September, but are prepared that it could be a mistake.
Because that's one thing I did read as well, is if they wait too long, they may not have another chance.
Well,
to move it.
The one thing that coming out of the Fed minutes that I think, you know, it was kind of an important takeaway. They were hawkish, but then Yellen talked about how they have other tools. And the key point being is, well, if you're being hawkish, why are you talking about other tools? I think,
exactly.
I think they are prepared that if they hike in September, it could be a mistake, and they have other ways of dealing with it should it be a mistake.
Right, right.
And if it goes well, then yeah, I think they're going to jump on it and do it again in December. And I think the reason that they want to do one in September is to get one out of the way before the election.
Right, yeah. And then what that would do is that would send out a message that, hey, you know, things in the U.S. really aren't, you know, we're not coming Armageddon.
Yeah.
You know, things and try to build some kind of confidence. And, you know, they're only raising at ranges, but it does take away the ability to go back to a quarter point, though, if needed, you know, without anybody even knowing for the most part, or at least not making news.
Right. Well, I mean, don't get me wrong. I'm not gung-ho for one in September, but I'm not ruling it out as a possibility.
Right. Wow. So what else? Everybody, any other questions for Beth? We're so lucky to have her on, so I'm hoping somebody else has some more stuff to ask. It's just, you know, for me, the whole thing behind the Fed has been the ability to play, you know, Oz. And they've been so good at it, you know, they really have. You know, you talk to a guy like Kevin, you hear a guy like Kevin Ferry, and he just praises the Fed and how they've always been able to be ahead of the curve. But now, where do we go, though? That's this, you know, is the world going to collapse and we're going to be behind the curve, or are we going to figure out, like you said, you know, have other ways to stay ahead of the curve so that, you know, we always come out smelling like a rose? For no reason at all, if you ask me, besides the fact we're just the best of the worst.
Well, yeah, I think that's ultimately where we're at. I mean, my personal opinions is I tend to switch where I'm standing about the same time that everyone else on Twitter switches where they're standing. And it's not intentional that I do that. It's just my point of view. And how I start my analyzing process and where I get to things.
So you're
Uh,
looking much further out then, is what you're saying?
well, I think I can see what I'm.
A lot of people seem to be really more
I'm
excited.
not saying that they're out of touch with reality, but I think because I am very in tune with the lower level class and I know where they're at. I can see how, you know, the the lesser half live.
Right, right. The reality of the situation, as
And
opposed to what's smoking.
one of the biggest things is as investors, we can look everywhere we go. What's the parking lots look like when you go places? What card are they pulling out of their wallet when they go to pay for things? Is it cash? Is it check? Is it debit or is it credit?
Right.
When people are paying for things, if you just notice what's going on around you, you get a sense for what people are actually doing. You know, every time I go to certain dealerships, how busy are they? When I go into Walmart, who's there? When I go into Target, who's there? You know, is now in certain areas like a military town, or which Goldsboro is, basically we have no industry. It is all services. All you have is retail shops and food places,
That's
and that's
exactly the
it.
way Oahu is. I mean, we're the same way, I mean, it's all we have 4 or 5 bases that keep this island running.
So when you look at the actual jobs that are there, how much can people possibly be making?
Yeah, well, I'll tell you one thing though, the charade can go on for the longest time, and I think that's the biggest mistake that a lot of people, especially people that expect something bad to happen. It's just crazy how long the tap dance can go on for,
Well, I'm
and what
sure a
they'll be
lot of you
willing to
have
do
seen
to
The
make
Big
it
Short.
continue.
Well,
I'm sorry.
I'm sure a lot of people have seen The Big Short by now. It can go on for a while. I
Right.
mean, you saw how long they were holding their shorts before things finally started to trickle and things finally started to blow up.
Well, what's
And
obvious is when you look at every bubble and how big they get,
oh
and
yeah,
how crazy they get, and how overextended they stay for so long. That's the real tell. And that's why I constantly encourage people to try to stay with their positions as long as they can, because you just don't know. And it's easy to ride the wave, like somebody said earlier. Alex was saying it's about riding the wave. My mentor was so good at it. My gosh, he would have so many long-term trades where he would be up. When we were doing stocks, a lot of them he'd be up 200-300%. On $10, $12 stocks, $15, $20 stocks. It's just amazing how much cash is out there. And you look at, we're in a 5-year bull market for what? What are we in a 5-year bull market for? Just because there's so much cash, right?
yeah. Which that's something you have to consider. At what point in time do the long-term investors get their premium on the stock market?
Well, one thing I'll tell you that's really kind of when you look at the ES, the big picture. I'll pull it up. One thing that's happening now, what I see, is that this period of consolidation now has been so long now that we could almost consider whatever happens next as a new thrust, as a whole new move, maybe. I mean, look at how long we've consolidated here on this monthly.
Yeah,
I mean, it's so whichever way it breaks now. I mean, to say that we don't have the energy now to really push this higher. If it does break higher, I find that hard to believe. I mean, because I mean, there's so many people, like you said, that are negative and that feel like that the market's tired. But for me, this just looks like it's just incredible consolidation with a really good chance to test 2,400. In a very orderly way. If they continue just to grind the way they are. I mean, look
you're
what we
talking
did prior to
2400.
this move.
Yes, you were talking 2400 on the S&P. Yes, right.
Yeah, yeah. I mean, like if you the measurement from 21 to 18,
Yeah,
we can easily see that from here. And I would think if we see something like that happen between now and say November, then I would think that it would be the market telling us that we're going to see Mr. Clinton in power again, and he's going to really. I really feel if he does get picked, we are going to see some bubblicious stuff like we've never seen. I don't know where, but I feel like there will be. That's just his nature, and that would be the
I
short of all shorts if that does happen. I think.
I'm bearish. I'm bearish on the market. I won't hold back on that. I don't. And my reasoning, I could be completely off base. I could be very, very wrong. Last year, I mean, and I've told you this before, I was a bit bearish on the market last year, and I didn't trust what was going on, so I switched over into bonds.
Right.
And my switch, at the time saved me a lot of money on the retirement account, from where the ES is just dropped out of nowhere, and bonds remained pretty much stable and started climbing. And basically what you had there was a bit of a deflationary period where the bonds and the S&P kind of diverged. And bonds continued higher while the S&P wasn't doing much of anything. It kept going, having these big drops. Well, bonds have now stopped, and they have started declining, while the S&P was kind of catching back up and started moving again. Well, I'm sitting in cash in that retirement account now. Excuse me. But I'm sitting in cash now because I don't think bonds are going to go any higher, and I don't think the market's going to go any higher. And unfortunately, when you have a retirement account like that, they don't have any other options other than
Right.
money market, bonds, or the stock market.
Right.
So,
Right. Right.
so
Well, I mean, when you're unshort, that is the best place to be. But
I would rather preserve my capital than lose it.
one thing that really concerns me though, as far as for bearishness goes, is the way I see it is the Bears have had multiple chances to take charge here. I mean, they were, here we had the volume wasn't so great, but in here though, I mean, we had some decent volume, and then they just to get engulfed, and now we had this another chance here on this doji with big volume where they could have taken it when dip below the 10 and the 20 here on this monthly chart, but again it got bought up. So I mean,
Well, can you trust the summer hype? I mean, it grew in the summer. I mean,
well, my
it beat
point
its
is,
highs during the
it
summer in
seems
low
like
volume.
everybody's seeking yield. I mean, everybody is seeking return,
Yeah.
and and when that happens, it's just osmosis. And that's what I mean.
Oh,
Constantly
I
money
don't
comes into
disagree with you.
markets.
I
Constantly
don't.
every month money comes into markets. It's just the way it is. As far as whether it's right or wrong, but coming in, because my mentor always used to tell me, because he was a very bearish person in general, he said never underestimate the power of money. He says there's way more money that can be used on the bullish side than on the bearish side. So you have to understand that odds is there. And my feelings is, for the only way they're going to get the Americans to vote for to get involved in this election process in a manner where it's going to be positive, especially for the Democrats who've been in charge, is this is all they got. They got to run this market. And who's going to be on the other side? I mean, at this stage in the game, and if they are, then they're just going to be, like you said, it's going to just be a massive stop run when you see some kind of consolidation like this.
So what happens when they win?
Then I think that's when we'll see the massive pullback. That's personally, I mean, I hate to make.
So then everybody can blame it on the Democrats, right?
No, I think it'll continue. Well, look about when Obama. I'm trying to look back at what happened when Obama was picked.
It's the
I
same
mean,
cyclical scenario.
yeah,
Um,
it was just timing just the way it was, but everybody was very bullish going into the election, and the markets were up at highs 8 years back, for I recall, for that time at least. I mean, we had the market had crashed, but then we had a tremendous pullback, and we had to shake all those, all of these people, maybe even this entire channel through the summer, all the way back to 21 after that election. Because what will happen, and this is just my theory, is that he's going to give they're going to give their cronies a chance to get everything on the cheap, and then we'll see the incredible bubble that I feel will happen. It's just the nature of the people, and what they're about. I mean, if Bernie Sanders was elected, then I would be saying, wow, everybody better start putting money into infrastructure because the man, that's all the man's going to care about. And you better be careful if you own Goldman. Have you seen where Goldman is, by the way? Have you noticed where it is? It's sitting? I'll pull it up. It is right on such an amazing level. And believe me, opinions are worth nothing, folks. It's just as much as you paid to come in the show. So just trade what you see, not what I say. That's for damn sure. Look at where Goldman is here on this weekly, right up against a key level here at 170. And it's been amazing to see Goldman move from 140 to 170 throughout this summer, when you see what the markets have done. So I'm just wondering if there's more to this as financials tend to lead the way, or is this, like you said, this sell of all sells, which could be possible. I mean, we've had a 5-year move, but it's just interesting to see now with Goldman coming off the mat. How do you feel about financials in general?
I think where they're at's not a bad place to be at, but I think they're going to start having some problems on their books again before long.
Yeah, I mean, this does. Look at a monthly of it. It's definitely not looking positive. You had this really beautiful, 45-degree angle here, where now we flipped over. We're on the other side of moving averages, and it looks like they're selling in this area. It will be do or die, in my opinion. That's why I'm just pointing this out. It's a really interesting level here.
I was doing some research on auto loans and student loans and some of the things that they're still having to write off. The main difference between the student loans and the car loans compared to the housing bubble, luckily, they cost less.
You
Than
can't
the house.
sell your student loan though, right?
Yeah.
You're stuck with it.
Well, no, I mean, but at the same time, they pack up those student loans sometimes the same way they did the mortgages.
Wow.
And you would think,
really?
but however, people paying their student loans recently, they once upon a time they had just as good of a credit rating as mortgages. People always paid their student loans. It was never a problem to make sure that they were getting paid.
Well, you know what it is too. They weren't 80, 50 grand in debt either.
Yeah, yeah. So I mean, the student loan portion is starting to get as much as some of the small house loan portion.
Totally, it's crazy.
The difference with the auto loans though is car loans will never be more than about 50,000 for some people. And if you're buying more than 50,000, then hopefully you can afford it.
Yeah, they're not giving you that loan unless you can pay it back.
Yeah. But the fact that you see car loans going for 7, 8, 9 years now, that and people are constantly rolling over the negative equity into the next loan. It's dangerous, and it's happening all the time. I have strong car, ties.
Right,
I know a lot about what goes on in the dealerships and and how those loans are affecting people. And when I can see a salesman in dealerships that are selling over 100 cars a month, constant basis. We've had record auto sales.
Yeah, it has been amazing.
And then like I mentioned yesterday, the people working in the shops, they're not having as much business because the type of labor that they're doing is, packaged oil change, tire rotations that come in with the selling of the new car. There's no upgrade, there's nothing else to sell, so you have these technicians that there's not as much work to do. So,
isn't that where all their money is in the service, though? I mean, isn't that where they make their...
Yeah, the dealerships make nothing on selling most cars. Their money comes from the service. So with them packaging the oil change and the tire rotations and all this stuff in with the new cars, they're killing their service departments.
Wow, so it's crazy they would do that.
They're basically shooting themselves in the foot. I mean, some of the dealerships around here are now starting to build body shops in order to subsidize that lost income.
Wow, that's sickening.
So they're having to take on a new type of, they're having to try to evolve, and that's going to put, some of the smaller body shops out of business because
Do
you
you
got the
think the
big
newer
ones coming
cars are
in.
more durable or more throwaway, though?
Oh, throwaway for sure.
So that's something that's going to help them in the future. A lot of these cars are going to end up in the shop, especially with all these computer parts and
But
things.
well, it's actually getting to the point where you don't have to have somebody work on it as hard, because I mean, think about it. When you get a BMW and you hit the fender on it, the whole front thing's got to be replaced if you get a scratch. It's
Right.
one piece that costs three grand to replace, and you pop it off and you pop the new one on. I mean, there's no true labor involved anymore.
That's wild.
So
Plug
I
and
mean,
play.
the whole
Parts in the
process is
car.
changing.
Hey, a couple of questions real quick for you from Nick
Yes.
so I don't get too far behind. He says, does Beth see oil bouncing back to 50 or back to lows? And what's Beth's view on rate divergence between EZ and dollar, and therefore bias on euro and even eventual low targets on euro? You're asking too much from her, Nick. She doesn't like to make too much predictions. And
Well,
also, okay, go ahead.
Well, I was just going to say on oil, I kind of said what I thought about that yesterday. Um, as far as where it's going to go, uh, long term, I see it going lower. I
You're
don't
right.
see it really breaking much above 50. It would have to take some type of production freeze or some type of like serious talk for something to happen to get it above 50. I think we have a real problem with demand. Um, and as long as supply continues to hold constant, then it really doesn't have anywhere to go. Um, and it could stay range bound for a little bit. So there's going to have to be some type of catalyst for it to get a real move going in either direction. I mean, when you look at the CO2 reports, the COT report, you have, you know, 500,000 longs to like 200,000 shorts at this point. Shorts have
Wow.
been gradually increasing again, but I mean, it's way oversighted long at this point. So you're going to have some kind of flushing to get a real move in a direction again. It's going to need some type of catalyst, I think. As far as euro versus dollar, the rate difference. Um, well, one of the big things that I saw recently is, you know, the trading of the euro has decreased significantly. The last international statement thing that came out, it was talking about how the actual, one of the big things that forex people talk about is we have billions of dollars traded on a certain amount of time all the time. Well, actual trading has decreased, volume's gone down. Everybody knows that since forex started becoming traded a lot since the financial crisis, that actual amounts have the volumes decreased. So as the volumes decrease, the euro, the yen has actually picked up in comparison to euro. Um, so I think the actual interest rate, you know, differential and how the currencies are playing against each other, euro has lost some interest. So the play might actually be more towards yen than euro.
Well, they've taken a lot of leverage away from people in Forex as well over time. I think they made it a lot harder, too, for people to get
Well, in
accounts.
the U.S., of course.
Yeah.
I mean, you can still
Uh,
get 400 leverage in other countries. You can only get 50 here.
yeah. But, we got to figure a lot of the traders are probably from the U.S. Um, and as far as oil goes, it seems like every day we hear more about more coming online, more coming online. So I totally agree with you on your thoughts on oil, especially long term. Let's see, what else does he have here? He had a bunch of questions. He goes on to say, so Beth's view is that the stock market needs a big correction lower when they stop pumping it up with QE.
Well, a proper 25% correction would only take you down somewhere around 17 or 18 from where it's currently at. Um, I mean, beyond that point, you're talking bear market territory. Um, what I think happened is you hit a significant level on the S&P when it was getting to the, you know, 2100 range. It was getting close to an extension of some sort. And I think people piled in at that point in time. They got a little scared at the beginning of this year. There was a lot of things going on. And I think it had a premature correction down to the 1800s where it stopped. I'm not looking at a chart right now. I'm just kind of going off of memory.
I have it up right now if you want to see.
But yeah, when it corrected down into the 1800, I think it wasn't a full correction. It wasn't a full 25% correction. I think it was a like 15, 16%.
Right.
And so it's continued higher into a next extension of sorts. It's gotten closer to a 1.27 extension, somewhere around there. And now it's consolidating again. It's forming, if you look on the daily, it's forming like this little diamond-shaped house-looking picture. And a lot of times when you get those formations, it does go to the downside before it can go higher. If that will actually happen, you know, patterns fill all the time. It could easily break higher.
Well, there's a bunch of key levels to watch, without a doubt. I mean, the bottom line is on that weekly that, you know, if we get back under that 2135, then there's plenty of room, you know, down to this 2050 area and still be quite bullish.
Right.
You know, so, but I mean, hasn't even gotten near that spot. It hasn't even come close to it over the past 2 months. So it's just going to be interesting to see when this volume comes back in. Everybody comes back from their vacation.
Well, you always have the fear and greed factor. And right now we are smack dab in the greediest of greed. The thing is people they have this fear that it's going to go down. But the greed is outweighing the fear. They're putting the fear in their back pocket and everything looks fine. So as long as you don't have any fear, then it's going to continue to go up. People don't, markets don't go down unless they have if somebody
Right.
really gets scared.
Well, I mean, if the Fed raises rates in September, then I would think that would be some serious fuel on the fire, you know, as far as for higher goes.
Well, it would come down. It would come down initially, but yeah, I mean, it would bounce for higher in the long term.
I think it would be. I would just think it would be confidence. You know, I mean, one thing about I think the United States has a huge advantage is we could see all assets class rise, just because of the nature of this situation the rest of the world's in. You know, I mean, it's highly possible. You know, I mean, it doesn't make any sense. And there's this one fellow I was really good friends with who was a high executive from Intel, and he always used to ask the question, why can't all asset classes in the U.S. rise at once? I think they can. I think with the state of the world now and the amount of money that's out there, all you need is just bad news from China, bad news from Europe, like you said, just keep piling up. Money's got to go somewhere. It's not going to go nowhere, right?
Yeah, I mean, they're always gonna look. Well, I mean, what was it the other day? Bill Gross. I don't put a lot of stock in anybody. Okay.
That's good. Yeah.
But there was something he was talking about, the bond king, get out of bonds, put your money in gold and real estate. And I just kind of laughed. I'm out of bonds, but I'm not going to go throwing my money in gold and real estate.
But wasn't he wrong like on every single rate hike or something at one point when I forget what the president was doing?
I can't keep up with all the people that's been wrong because everybody's been wrong at some point in time over the past 2 years. So
it just blows my mind is how some of these guys can stay so famous with so much crappy calls. Isn't that amazing, though? Some of these people that still are relevant with all their crappy calls over time.
Well, I mean, only the people that know better. It's I don't know. They manage to get attention. Somebody somewhere thinks they know something, and even though they get stuff wrong, it's easy to say, "Well, we all get some wrong." You can't be right all the time. That's part of the game.
And I think when they are wrong, they may not be wrong on their book. They may just be talking a different talk. Because I remember back during the, and we'll let you go here soon, because I know we've been talking a long time. I remember back when the internet bubble collapsed. Goldman had Anthony Noto come on CNBC almost daily saying how this is the place to buy, this is where it's going to stop, everything's going to be okay, this is just temporary, blah, blah, blah. And of course, it just collapsed all the way down, and he looked like an idiot. And they used to make fun of him and everything, but eventually he became partner in the company. So you got. I mean, I think you have to just take all that talking as a really just the weight of salt, because you just have no idea what the true motivation is, what they say when they come on the air,
Oh, I
and
think majority of the time,
how they
whatever a
look. They
bank
probably
says they're
care
doing, they
less.
got five people doing the opposite.
Right, right,
I mean,
yeah, because they could care less of how they look. All they care about is what they end up with at the end of the month, of
well,
course.
yeah, I mean, it's all about their bottom line. They sit there. I mean, if a bank, and this is one of the big things that where I'm coming from. When I say I'm not going to give out specific trades, well, of course I'm not, because I have clients that pay me to do that for them. Why am I going to give that information out for free? Now, I can give you general ideas, no harm, no foul. You go to a massive bank, and they're in their little banking research or whatever, this stuff gets thrown out all the time, and I know people have paid for it, and it gets put out there into the real world, on Twitter and in chat
Sure.
rooms and everything else. But do you think that these people that get millions, billions of dollars for their clients, that they're going to actually stick to everything that they put in that bank research, that it gets thrown across the world to everybody? I mean, if they did exactly what they said they did every single time, then why aren't more traders that pay for that bank research making the same amount of money? I mean,
Right.
everyone should be millionaires if you went strictly by their guidelines.
Well, the way I look at it, like Goldman will give out, like I'll never forget when Blankfein came out a couple of years back and said the biggest risk at the beginning of the year, I forget what year it was a couple of years ago, so it was not being invested. Every now and then they'll throw a huge bone out like that, which they'll be really right, and then they'll have about 10 bones in a row that are just total garbage.
Well, I think it
It's
was
just funny
Goldman
how it's the
Sachs.
yin and the yang, how they play that yin and the yang with how they want people to be able to say, wow, well, Goldman told me this and I made a fortune. But what about when Goldman told you that and you got your clock cleaned?
Well, I mean, it was like earlier in the year. I can't remember if it was Goldman or Bank of America. It was a bank, and their top five trades of the year, they had to clean them all out by April. I mean, they were done. They were over. And
It's
if any
hilarious. I
trader
love
had
it.
followed that, they would all have blown their accounts.
Isn't that the truth?
It
And,
was
they
horrible.
they have the deep pockets. They can ride it out. They can ride it out, and then and just like Philippe says here, he says, they're advising you to buy. Well, they're selling to you. They're advising you to buy while they're selling to you.
Well, I
That's
mean,
well
that's the
said,
thing with the
Philippe.
banks and whoever's on the other side. The big money, the smart money. They have four or five different places they're going to buy all the way up, or sell all the way up, and then buy all the way down.
Yes,
They're
that's a very
doing the
profitable
opposite.
way to trade.
I
Very,
mean, and
if you
that's
know,
exactly what they're doing. And the average trader,
it
they
doesn't get any
don't.
more profitable than that.
I mean, they don't perform the same way. It's the whole, I'm going to take some off here, but you don't never take some off when you're losing. You
Well,
wait for that. I mean, it's one of the most absurd things I've ever seen traders do. You have target profits. You have three of them. You take some off every step, but yet, why don't you do the same thing with your stop loss? You
yeah, no,
only have
I tell
one.
you
You
what,
have one
the
hardcore
scaling is
stop loss, 100 pips away, but you don't take any off on the way there.
I
So,
think the biggest mistake is that people don't quickly scale out of their trades when they're wrong and don't scale in more when they're right,
well, see,
because I
that's what
mean,
I mean. Is the level of scaling is. Oh, I'm gonna scale some out so I can see the profits in my account, but they don't never scale out when they're wrong.
no, the people don't scale properly. I agree 100%. The scaling is an art, and that's the art of trading. And my mentor said if he could get the entry right, he could kill the trade because he had his style, his technique was. I mean, if he was able to get that first profit, it didn't matter which way it went because from there he was going to scale in either direction. Either in more or out more, depending on if it was working or if it wasn't. In a manner that made sense.
Yeah.
Listen, I'm gonna let you go, Beth. It's pretty late, but I'll tell you what, we love having you mic'd up. And let me just a few more comments here, real quick. Robert says, I just want to thank you so much, and Beth, for your thoughts in the big picture. was driving but stopped on the side of the road to pay attention. All
Oh my
right,
gosh.
Robert. Yeah, right. I didn't say anything. I was saying anything that good. And Nick says, sounds exactly like, yeah, our old friends entry and exit plan. Well, you know what? That's how pro traders trade. You cut your losses quick, and you pile in your winners. It's not that hard, right, Beth? But it takes tremendous discipline, and you have
Practice.
to be able to eat crow. No, you have to be able to eat crow. And what eat crow involves is having a great trade where you do the work, it starts to work out for you, it's working, and now all of a sudden it's not. And you
Well,
have to
it's
be able
just
to
like
say,
any.
look, I don't care. I put all this energy and time into it. It was working. This isn't good.
Well, you just have to think of it as if you're going to like play baseball or something like that. Every baseball player that gets up to bat has a batting average. They don't hit a home run every single time. They don't hit a base hit every single time. They know they're going to strike out a certain amount of times. But that practice, knowing what pitch is yours and knowing when to hit and when not to hit, when to take a walk, it's exactly like playing baseball.
It sounds like you've been reading Trading in the Zone. That's exactly what
Well,
Mark
I
Douglas
think of it
talks
as
about.
surfing a lot too, like what wave to take,
Yeah.
because I'm on the beach, when do you stay out of the water? Well, when there's a hurricane coming, you
Or when
know.
the mullet are running.
Yeah, yeah. I mean, hey, if you want to take the risk and you want to go out and surf when there's a hurricane coming, hey, just know what's on the other side. But I mean, it's like trading today during NFP. If I was to go surfing this afternoon when the hurricane comes through, um, you just you can use any sporting analogy you want, but that's how you play the game. And
Well,
trading is
everybody has
exactly the same way.
their levels of ability. You know what I mean?
Yeah.
I mean, you see guys who go out in Puerto Escondido in Mexico surfing the pipeline when the waves would. I mean, normally there's a red flag on the beach and people wouldn't get near it, and so that's just the same way like trading non-farm. Guys like Goldman who don't care in either direction how far it goes because, like you said, they're going to buy it all one way and they're going to sell it all the other way. Those are the people that are allowed to play these times, not us little guys who don't have those deep pockets.
Yeah.
All right, Beth, you have a great weekend. Remember, everybody, 3-day weekend, so I won't be here on Monday.
Yeah.
And
Enjoy the
again,
holiday,
special
everybody.
thanks to Beth for coming on. Well, I'll tell you what, if she ever comes to Hawaii, I have to make sure her and her significant other gets the tour of the decade. That's for sure.
Looking forward to it.
Thanks again, Beth. We really hope to see you again, mic'd up soon. Great
Thanks,
trading.
Chris.
And everybody be safe. Have a great weekend. Aloha. I'm going to get on out of here. Take care, you all. Take care, Beth. Thanks again. Bye bye, Albert.